Welcome to the Real Estate Espresso Podcast, your morning shot of what's new in the world of real estate investing. I'm your host, Victor Menashe. On today's show, we're talking about uncertainty. We can all agree that not everything in life is predictable. Life's full of surprises, some of them pleasant and some of them not. It's been said that a confused mind doesn't buy, and that's particularly true in the world of investing. Investors seek clarity. Things that are too complicated, have too many variables, or just have large unknowns are simply off the table. Investors are a special breed. Professional investors are relying upon their money working for them. Professional investors truly attempt to quantify what their money's going to do. Investors hate uncertainty. Anywhere you see uncertainty, you see falling prices. What's going to happen in the UK with Brexit? It's absolutely uncertain. Businesses don't know if they're going to fall under UK rules or European Union rules. They don't know whether they're going to need to relocate in order to do business in Europe. They don't know whether the movement of goods between Ireland and Northern Ireland will require customs and excise control. The movement of people and goods in Ireland used to be free and now could become a divided island again. This is reflected in the falling price of the pound sterling. It's reflected in falling prices of real estate in London. The person who bought a fleet of airplanes, registered them in the UK, and up until now has had free access to the European market might face an uncertain future. Would you invest in that aircraft business today? I wouldn't. Investors hate uncertainty. If you buy a property in a community that's dominated by a single employer, you're highly vulnerable to that single employer. I see this in towns where there's a large military base. When the staff are on base, demand for property is high, and as soon as they deploy to a situation anywhere in the world, whether it's a peacekeeping mission or a hot zone, vacancies shoot through the roof. As a landlord, you have no recourse in situations like that. Would I invest in a market that was highly dominated by military employment? No, it has too much uncertainty. I used to see situations like that in the technology industry. A new tech startup would invent the next greatest innovation. In the first few years of sales, they had a small market share and still not a threat to the entrenched players. And then all of a sudden, as soon as they become a visible threat, a large established player would serve them with a patent infringement lawsuit. I've seen Intel do it, I've seen Qualcomm do it, and I've seen Philips do it, just to name a few. Most of these patent infringement suits are frivolous. In fact, it happened to me. Our team received a letter from Intel Corporation claiming that one of our products infringed on 5 of their patents. We were able to demonstrate the suit was frivolous and actually didn't apply to our products. Ultimately, we were able to successfully defend against the patent infringement suit. The aggressor is going to threaten the company with an injunction on the sale of the product, perhaps a royalty payment that stands to cut heavily into the profit potential for the company. And as soon as that happens, no investor is willing to invest in the company. No lender will extend new credit. The unbounded liability is simply too uncertain for investors to put their capital at risk. In these circumstances, uncertainty is used as a weapon to attack competitors. I call it the weaponization of uncertainty. In less extreme situations, many of these uncertainties can be bounded and quantified. Will the 25% import tariff on the price of softwood lumber be lifted? Will the current slowdown in the real estate market translate into lower prices for construction labor? Uncertainty can also bring bargains for the savvy investor. For example, will interest rates go up? When will they go up? How much will they go up? We can model all of these situations. Uncertainty is another word for risk, and risk is only a risk if it's outside your plan. If you've already assumed that lumber is 25% more expensive on your project budget, and your project still works, well, then you're in a strong position should prices change for the better. When you see a slowdown, you often see an overreaction in market conditions. The market can switch from being a seller's market with multiple offers and sales over asking price to a buyer's market where sellers have to offer a significant discount in order to complete a transaction. And that shift can happen very quickly. By the time the data has been compiled, the transition may have already occurred. The time when the market was balanced sometimes is no more than just a few weeks. For example, I was speaking with an investor from Fremont, California, and this area is one of the hottest real estate markets in the San Francisco Bay Area. It's home to companies like Tesla and has experienced tremendous demand in recent years. One title agent in the area completed 60 transactions in the month of October, a pace that's been fairly consistent for months. In the month of November, only 10 homes changed hands at that same title company. That represents an 83% drop in transaction volume in the span of a month. If I were an investor looking to flip houses in Silicon Valley, I would be very cautious about how long properties might remain on the market unsold. If that's the new normal, I want to see some history with the new market conditions so I can properly estimate that new normal. In the meantime, as you're thinking about that, See where you can bring certainty to places in your investment world where there's tons of uncertainty. Have an awesome day. Go make some great things happen. I'll talk to you again tomorrow.